You finally decided to go electric, but now you're stuck. Buy it outright, PCP, salary sacrifice, Every option claims to be the best, but which one actually is? Let's break down the 3 most common ways to buy an electric vehicle, an EV, and why the best route probably depends on a question you haven't even asked yourself yet. Right, let's start with buying outright, the simplicity premium. This is the most straightforward, but also the least common. Buying outright. You want the car, you transfer the money, and that's it. No monthly payments, no APRs, no weird end of contract fees. You own the car 100%. This is great for people with cash sitting around. There's no interest or finance costs. You can sell the car whenever you want, and it's in your name from day one. But here's the flip side. You're tying up tens of thousands of pounds in a depreciating asset. Yes, I know you could tie up hundreds of thousands of pounds if you're choosing those types of cars, but then you're probably not thinking about depreciation. If you are a high rate taxpayer, there may be better ways to deploy that capital, and you don't get any tax benefits doing it this way. So whilst it feels clean and simple, it might actually be the most expensive route, depending on what you do for work. Now let's talk about the most popular route for regular consumers: leasing, PCP, personal contract purchase, or personal loans. Here's how they all work in simple terms. First is the personal lease, which can sometimes be called personal contract hire. You effectively rent the car for 2 to 4 years, you never own it, and then you just hand it back at the end. Monthly payments are often lower, but there's nothing to show for it long term. Then there's PCP, personal contract purchase. You pay a deposit, then monthly payments, and then a big lump sum if you want to keep the car at the end of the term. This gives you flexibility at the end of the term. You can just return the car, you could buy it outright, or you can swap it for the next car. But those balloon payments at the end, the big lump sums, they could be and often are higher than you'd expect. Then there's the personal loan. You borrow money to buy the car. You could take a loan out from the company that you're buying the car from, or you could take a loan out from your bank or another financial institution. Now, just like buying the car outright, except this time you're taking the money from someone to buy the car, you own the car from day one. Now, with this route, monthly payments tend to be higher, but there are no mileage caps or return fees, which you can often get with the PCP or personal contract hire routes. All of these methods typically offer more flexibility up front, but can lock you into monthly payments that don't make sense unless you're 100% sure that you want to keep the car long term. And remember, cars can drop in price fast. What you pay today may be a premium for something that's worth far less in 2 years. Then there's part 3, business contract hire and salary sacrifice, the tax advantaged routes. For me, this is the quiet winner: salary sacrifice and business lease schemes. If you're employed and your company offers a salary sacrifice EV scheme, here's the appeal. You lease the car through your employer, the lease payments come out before tax and national insurance. This is huge because some of those tax and NI payments would be otherwise going to the taxman. Here, you're putting some of that towards your car, so it's money you wouldn't have got in your pocket anyway. There is normally a benefit in kind payment to be had, but for electric cars, this is super low at the moment, currently 2%. Benefit in kind payment is a payment you need to make for the benefit of your employer giving you something. And often you'll find that insurance, servicing, and breakdown cover are bundled in too. So what does that mean in real terms? Well, it means that you could drive a £40,000 electric car for under £400 a month. Fully insured, maintained, and tax efficient too. That's the power of doing it through your employer. And if you're a limited company director, then there's options for you too. This is what would normally be called a business lease or a business contract hire. The slight difference is that the car would be leased through your business, through your company. The monthly payments will still be tax deductible from a corporation tax perspective, and you'd still get access to the low benefit in kind rates as an electric car driver. Now, I know this all sounds brilliant, and in many ways it is, but here's what you need to watch out for. You need the complete picture. You're locked into a contract. If you leave your job or your company folds, then you may still be liable for the rest of that lease, or you could face hefty exit charges. Typically, you can't modify the car or use it as an asset, and that's because simply it's not yours. It belongs to your employer or your business, your company. You're essentially renting it through work. Want to sell it early? You can't. Want to wrap the car or kit it out? Read the terms carefully to see if you're allowed to do this. The total cost can still be higher than it looks. It still might be better than other methods, but you've got to know what you're getting into. Yes, you save on tax, but bundled packages might include add-ons that you don't need. And if your tax code ever changes, then so could your savings. And of course, the other thing to bear in mind is not all employers offer salary sacrifice schemes. And even if they do, the scheme provider that your employer uses might have fewer models on it. Fewer models of the electric car type that you want, or less flexibility than you'd expect. So salary sacrifice is smart, especially if you're a higher rate taxpayer. But it's not perfect. You give up some flexibility for tax savings. Still, if the car's for commuting or other business purposes, you're not too fussed about ownership, and you want maximum convenience, then this route of salary sacrifice or business contract hire is hard to beat. So let's zoom out. Buying outright is simple, but only really good if your money has no better home. Personal finance options give you flexibility, but come with certain trade-offs and costs that you need to be aware of. Salary sacrifice or business leasing? Arguably arguably the smartest choice if you've got access to it, because it uses tax efficiency as fuel. Get it? See what I did there? The best option really isn't about the car. I know it's a bit weird to say in a video about electric vehicles, but it's not really about the car. It's about what you do, how you earn, and what you're optimizing for. Cash flow, flexibility, or total cost. And if you're thinking about switching to an electric car, then the chances are you've probably got a petrol or a diesel vehicle to get rid of first. And trust me, how you sell it can make a massive difference. Don't just take the first offer you get. And of the different ways to sell your car, some ways are smarter than others. And I break it down step by step in this video. Definitely worth watching before you list anything.